Hi everyone, let's go over my micro, bullish and bearish Elliott Wave scenarios on Bitcoin. Starting with my micro bearish scenario where we're still expecting downside in a WXY, with wave Y being a three-wave structure to the downside, where the most common target for wave Y is between the 1 and the 1.236, taken from the high to the low of W to the high of wave X. Now what's interesting is that the most common target area of Y is in confluence with this key level at 29.5k, which is the low over here for then maybe a liquidity grab and then a continuation to the upside. If, however, this level fails, then just below this level we do have a target box which is sitting between 28.9k and 29k. Now, as it stands with what I am seeing on the lower time frames, this at the moment is still my preferred scenario. And when we zoom into this scenario, we basically zoom into what I'm seeing in this wave Y and we go to the 15-minute time frame. We're looking for a three-wave structure over here. So in then wave W, so it's the blue count, and then a W, X, and then eventually a Y. Then in this wave W, we then have a three-wave structure and an A, B, C over here, followed then by this expanding flat in a wave X, which either is then already finished or is only the first structure of a bigger wave X reaching the daily. So you can still get something like this, for example, to reach the daily level at 30.7k, or this wave C in an expanding flat in wave X, which is a wave A, wave B, and then a wave C, is not yet finished, as this white target box over here is the target area for a wave C in an expanding flat A, B, C, and price can always wick above the area, hit the daily, close inside, and continue to the downside, for then eventually a three-wave structure to the downside in a wave Y. What is interesting though about what is price doing, or what price is doing over here, is first of all it hit the 382, which is usually a minimum target for a wave X, starts to create some bearish divergences locally on the 5-minute, which I will show you in a second, and by pulling the fibs, the 1 and the 1.236 from the beginning to the low of W to the current high of X, you see that the 1-to-1 and the 1.236 are also in confluence with the target area for the green wave Y, and again are in confluence with the key level at 29.5k. So that's very, very interesting confluence all around this 29.5k level, which makes this level a very interesting level. However, there's more reasons why this scenario feels like a preferred scenario to me, and that actually has to do with the bullish scenario. So if we zoom out a little bit again, then in the bullish scenario, we're looking at a finished WXY, where wave Y hit the most common target area for a wave Y, and that is the end, and we're now looking for upside, which then means if this is part of a wave 4, because on the low time frame, if we go up in a time frame, we're thinking about a wave 3, 4, and then a wave 5, meaning that if we're looking for a wave 5 to the upside, we're looking at this then to be a first wave, which is then an impulse. We're looking for an impulsive structure in a wave 1, this to be a wave 2, and then continuation in a wave 3. But now this price action retraced to the 886 level, taken from the low to the high over here, which is another reason, besides many reasons mentioned in my previous video with this move up, which I'll repeat very shortly in a second. But this is another reason why this being a wave 2 and this being a wave 1 gets a lower probability, because this is a rare target for a wave 2. So even if this is a wave 1 and this is a corrective wave 2, the 886 is a rare target for a wave 2, but a common target for a wave B or a wave X, which is therefore, like, probability wise, a higher likelihood that this price action is corrective still. Besides things we discussed, and I go over this very quickly, that the highest volume of this move to the upside is at the end, which is more likely for a wave C or a wave Y, so corrective structures. You can't really count a 5-wave move in here, as this wave 3 is then the shortest wave, which is not allowed in an impulsive structure as well. If this is a diagonal, it is expanding, which is not something you like to see in a diagonal as well. So a couple of reasons that make this being an impulse a bit difficult to count. Another reason is that the only real support that I had left for price to retrace to was the daily naked point of control at 30.2k. Now initially it was respected quite nicely for at least a little bit of a bump towards the upside, but then price retraced to the downside, ignored the daily naked point of control, closed many candles below here on different time frames, and that kind of invalidates the last bit of support that I had on the chart. And below the daily naked point of control, there's not too much left. Yeah, okay, we had the 886, but as we just told you, this is not really a level you want to see a wave 2 retrace to. Now, if price is going to move towards the upside, as mentioned, we do have a daily at 30.7k, so that's an important area for resistance, but we have to wait and see if price is even going to make this resistance, because if we're going to look at the CVD divergences, and I keep saying this, local divergences have priority, and in the previous videos I have been talking about that this bullish divergences is not a clean bullish CVD setup because of the bearish CVDs that we have throughout this move to the downside. So yeah, on the blue line, which again I'll show in a second on the AGGR chart over here, you do see bullish divergences, meaning absorption of short positions, but at the same time you see absorption of long positions throughout this move to the downside, which is not really something you like to see, because this of course is countering each other. So it's not a clean bullish CVD divergence setup. Now these bearish divergences over here already played out, so the bullish one is remaining, but as price moved towards the upside over here, and I go to the fifth, let's go to the 5 minute actually, then at the lows of the price, so here the 886 was hit, price moves towards the upside, you don't see any bullish divergences here, right? Which is the low of this move. Now, if we're looking for a wave 1 and a wave 2, yeah, of course, I like to see some bullish divergences between the low of 1 and then the low of wave 2, but it would have been nice if we saw maybe some local 5 minute bullish divergences here as well. But that, of course, then didn't happen. But what did happen is that over here, price created just now a lower high, so a lower high on price, but a higher high on the yellow CVD, which again is a bearish CVD divergences during this move towards the downside. So that's not really something you want to see if you're looking at those bullish CVD divergences. Now, of course, it is a probability game. So there's always the probability these bullish divergences are going to play out. Price is going to push to the upside. We're going to take this high. We're going to take this high. It's always a probabilities game. Everything in this video is also about probabilities, but the probabilities become lower as you see bearish CVD divergences forming like in this move towards the downside, right? That's not really something that you want to see if you're looking for nice, clean, bullish CVD setups. So this is important to keep an eye on. Finally, looking at the news, we had some news today which already played out. We got a little bit of volatility at 3:30 p.m. However, tomorrow on Thursday at 8:30 a.m. in the morning Central East European time, and also at 2:30 p.m. Central East European time, we can expect some volatility as we again got some high impact news over here. So make sure that whatever you do around those times, you are going to be trading very safe and you got your stop loss, entries and everything in the right place. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use. And for now, thanks for watching and subscribing, and I will see you at the next one. Bye bye.